Good morning, guys, and welcome to your show. Today is, my chart here, Monday, October 22nd, 2018, and glad to have you guys here. Now, listen, these cell phones have changed the entire world. They've not only changed the way we do business, everybody's got one, and they're always looking at it. This is what's made Apple, by the way, is these cell phones. Darn things that they are. But anyway, where I'm going with this is people have a very short attention span nowadays, and the reason why, they don't read books anymore. They always get their nose in this thing, in this darn cell phone. Everybody, myself included. Look at me right now. I got my nose right in the thing. Anyway, let's open up the charts right here. And let's take a look at the short attention span. And this is what I think is going to happen right here with this situation with Saudi Arabia. Is the Saudi Arabians have said they have no intention on repeating the 1973 oil embargo. Now, this is what I was talking about on my show this weekend, was about what if the Saudi Arabians were to do what they did in 1973. Well, they're telling you right now they have no intention of repeating this. This whole situation with Saudi Arabia, just to me, is getting the feeling like it's getting ready to blow over. Because people have short attention spans, basically. And maybe I'm wrong about that. But I just getting that feeling anyway. They're actually talking in this article here, on this interview. They're saying that they are actually thinking about increasing production, Saudi Arabia. See, it says right here, Saudi Arabia is ready, I'll underline it for you guys. Saudi Arabia is ready to raise output to 11 million barrels a day, it says, in the near future. Oh my God. And has the ability to lift production as high as 12 million barrels a day if the market requires it, Al-Falah said. I guess that's how you pronounce his name. This guy right here. He's speaking for the Saudis. And so they're getting ready to pour out the oil. Just the exact opposite of what I was talking about, which would be a tightening of oil, which would lead to the dollar falling. If they do this, the exact opposite will happen, of course, from what I was talking about this weekend. If they increase production, prices of oil will fall. This is deflationary. And you know what the Fed's doing with their $50 billion a month and everything, this would intensify that. This would lay people off. This would move exactly the opposite of what I was talking about. This would, instead of creating new jobs, see, what they should do right now is what I was talking about this weekend. You know? Slam the Saudis. That's what they should do if they want a good economy. If they want to ruin the economy and they want everything to go down into a slump, allow the Saudis to increase production. Let them. They'll destroy our economy. Our jobs will go out the window if they do that, if the Saudis increase production. If they do this, they increase their production to 12 million barrels a day, the price of oil will drop, and the dollar will go higher. You know, and this is what they're saying here. And this is what's starting to really look like it's going to actually happen, is that this whole thing, this tempest right now with Saudi Arabia is starting to look like it's going to blow over. And because people have short attention spans. Anyway, that being said, I better get moving. You guys got short attention spans. Me too. Okay, so now let's take a look at Bitcoin today. Speak of the devil, here she is, Bitcoin. Bitcoin is 63.82, and she's going down this morning a little bit, you know. Let's go to the 1 minute chart right here, and you can see she's moving downwards a little bit. I don't think it's anything big. I think it's just a little downwards dip-de-doodle today, and it'll probably bounce back up. Cryptocurrency market capitalizations are $210 billion. Bitcoin dominance at 53.7%. And most of the coins are very slightly in the red. Now let's move on. What time is it? 1038, yes. Let's open up the Dow Jones. Refresh the page. And we're looking at up 11 points on the day. 25,455 on the Dow today. The Dow Jones is heading toward a crash, guys. And I've set the mark. The bonds have to be higher than 3.25 and holding up there, staying up there. I think the crash is going to occur more when the bonds start to really go up, like heading towards 3.5 on the U.S. 10-year. And then we're in crash territory. So it's coming. It's taking a little bit longer than I thought, but it's coming. And it's going to be a big crash when it comes. Because the market, picture the market is kind of like ice in the springtime. You ever seen those puddles in the springtime? And then when it's get to thaw, and the ice is still skimmed out over the water, but there's nothing under it to support it. Kids love to step on those, don't they? And crack them. You ever done that when you were a kid? You know, the ice, it's still there, but the water's drained out from underneath it. Well, that's the stock market. The liquidity is drained out from underneath it and it's ready to crack. That's what's going on. So let's take a look now at oil. Oil's down 25 cents on the day, 0.36%, $68.87. Silver price today. Silver, we got a funny thing with silver here. Take a look at this. What was that happened in the middle of the night last night? Was that a spike that went over $16? Straight up and straight back down again. What was that? That green spike. You see it on the chart? I don't know what that was, and I'm trying to find out today. But today, the silver price is down 8 cents on the day. Bonds and rates today. Let me pull the chart down here so you can see. Okay, let me slide over here a little bit so I can see my own chart. We're looking at the U.S. 10-year at 3.183. The short end of the yield curve is actually, the rate has climbed a little bit. And the long end of the yield curve, the rate's been falling. So that's a little bit flattening yield curve today. A little bit moving toward a flattening yield curve. What's the dollar doing today? U.S. dollar index, 95.94. She's up today on the day. So this has been your market report. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye, guys.